Hi guys, welcome back to this week's Technical Insight. US stock rallied on Friday as traders were encouraged by commentaries made by Federal Reserve Chairman Jerome Powell at the annual US Central Bank Conference in Jackson Hole, pointing to stronger than expected economic growth. The Dow Jones Index was up 247 points or 0.73% to close at 34,346 points, after being up more than 300 points at session highs. The S&P 500 bounced 29 points or 0.67% to close at 4,405 points. Tech-heavy NASDAQ added 126 points or 0.94% to end at 13,590 points, which was enough to help both of the index S&P 500 and the NASDAQ Composite Index to snap a 3-week losing streak. The Dow, however, logged a second straight week of losses, ending the week down 0.45%. The S&P 500 advanced 0.82%, while the NASDAQ Composite jumped 2.6% for the whole of last week. Optimism ran high in part by Powell's confidence in continued economic growth in the US. He mentioned especially robust consumer spending and early signs of a recovery in the US housing market, and reiterate the central bank's commitment to pull inflation back to its 2% goal, limiting further upside in the stock market. Jerome Powell gave no clear indication of which way he sees interest rate heading, but some investors expressed optimism that the Fed is nearing the end of its rate hike cycle, so there may be 1 or 2 more rate hikes left towards the end of the year. Following Powell's comment, expectation of a rate hike in November rose from a day earlier, according to the CME Group Fed Watch tool. Most traders still expect the Fed to hold off on hiking in September, which now stands at around the 80% probability according to the Fed Watch tool. Singapore shares defied regional market trends and rose on Friday, 25th August, to close out the week higher. The Straits Times Index added 9 points or 0.29% to end the week at 3,189 points. For the whole week, the STI rose about 0.5%. Across the broader market, winners edged out losers just 246 to 243, with 1.6 billion shares worth 836 billion changing hands. Other indices in the region retreated on Friday. Hong Kong Hang Seng Index dropped 255 points or 1.4% to end the week at 17,956 points, almost flat for the week, gaining just 0.03%. The Hang Seng Tech Index lost 99 points or 2.38% to close at 4,058 points. For the week, it is still up 1.29%. Top gainer for the week on our benchmark index was Seatrium. The ship and rig builder shares were up 4.41% for the week, although it fell 0.7% on Friday. Seatrium repurchased more than 20 million shares on the open market for 2.7 million or 13.4 cents a piece at the beginning of the month on August the 4th, a same-day filing stated. The shipbuilding company has brought back around 21.2 million shares as of 4th August, representing a 0.03% of its issued share capital, and is authorized to repurchase a total of 1.36 billion shares under its share repurchase mandate. Top loser for the week was DFI Retail Group, which engaged in the provision of retail products. Local broker CIMB Research lowered DFI Retail Group target price to $2.90 from $3.40, keeping its rating at hold. So for this week's technical analysis, let's look at both the charts of Seatrium and DFI Retail Group. So Seatrium Limited is a Singapore-based shipbuilding company that provides services to offshore oil and gas industry. The company's share price is now trading around the 14.2 cents level. The year-to-date daily chart for Seatrium shows that the price has been on an uptrend since the 13th of March, where it hits a year-to-date low of 10.1 cents. Connecting the low in March as well as the low in May this year, it forms an uptrend line which was recently tested around this July period and has remained intact and since has provided a stronger support for Seatrium's share prices. The candlestick analysis of Seatrium show that we have a bullish engulfing candle on the 24th of August. This pattern suggests that the uptrend is likely to continue. The yellow line that you see over here is the 50-day moving average. It lends support to Seatrium's share price in the month of August. The 20 days moving average, which is the white line or the Bollinger Band basis, is now reading at 13.7 cents, while the 50 days moving average is now at 13.5 cents. Both levels do provide good entry levels for Seatrium to go long. The 200 days moving average has found confluence with the lower bound of the Bollinger Band at 13 cents. The first resistance for Seatrium share price, of course, is the year-to-date high around the March period this year at 14.8 cents. Further upwards, the next resistance level is the December high of 2022 at 15.1 cents. The MACD analysis of Seatrium shows that MACD is currently positive and has reached above the zero baseline last week. This suggests that the uptrend is likely to gain momentum in the weeks forward. The RSI analysis of Seatrium shows that the RSI is currently at 60.75 as of last Friday close, which is a sign that the uptrend momentum is healthy and the uptrend may likely continue. So, all in all, the technical analysis of Seatrium suggests that the share price is in an uptrend, and the indicator shows signs that the uptrend is likely to continue and gain further momentum. If the price breaks above the upper bound of the Bollinger Band at 14.3 cents, it could retest the year-to-date high at 14.8 cents or even the December high at 15.1 cents. Next, let's move to DFI Retail Group Holdings. The company's share price is currently trading around the $2.40 level. The year-to-date daily chart for DFI Retail Group shows that the price has been in a downtrend since the beginning of the year. The price peaked at $3.31 this year in February, which is the year-to-date high. Recently, it hit a new year-to-date low at $2.32 on 23rd of August. The charts or the candlestick analysis of DFI Retail Group shows a bearish pattern, which includes a series of lower highs and lower lows. This pattern suggests that the downtrend is likely to continue. The Bollinger Band analysis of DFI Retail Group shows that the price is currently trading on the lower bound of the Bollinger Band, which may be the reason why it's seeing a little bit of support in the last two sessions. The moving average analysis of DFI Retail Group shows that the 20-day moving average is sloping downward. The 50-day moving average, which is the yellow line, crossed below the 200-day moving average, which is the red line somewhere in July, which is a long-term bearish signal. The MACD analysis of DFI Retail Group shows that the MACD is currently negative. The trajectory of both the MACD line and the signal lines are both sloping downwards, which means that there may be further downside to come for DFI Retail Group. The RSI analysis of DFI Retail Group shows that the RSI hit a low on 23rd August and had a rebound to the reading of 34 last Friday. So the short-term low may be in, but the rebound momentum may still be weak as just above the 30-point oversold signal. So that's all I have for this week's technical insights. If you find it useful, do give us a like or a share and consider hitting that subscribe button to stay updated to our latest content.